decoding cash flow statement for evaluating inherent strengths of a business. For being able to use the cash flow statement, what we need to do, we need to be aware that there are only three kinds of cash flow. Three kinds of cash flow or three kind of activities from which the cash flow will happen. Number one is the cash flow from the operating activities. Number two, cash flow from the investing activities. And number three is cash flow from the financing activities. What is the meaning of cash flow from the operating activities? Meaning of cash flow from the operating activities is the cash that I generate from my operations. That is the cash flow from the operating activities. What is the meaning of cash flow from the investing activities? Obviously, for setting up my operations, for expanding my operations, I need to continuously keep on making capital expenditure. So whenever I am buying an asset, that is my cash flow from the investing activities. So sometimes, mostly I would buy an asset, which is going to be my cash outflow, and sometimes I will also dispose some assets, which is going to be my cash inflow from the investing activities. Third is cash flow from the financing activities. Now, what is cash flow from the financing activities? So obviously, whenever we are making investment into projects, we need money. So money has to come from somewhere. So where the money can come? The money can come by way of debt, or money can come by way of equity. So the money which is coming into the business or going out of the business is the cash flow from the financing activities, and that is what we need to remember. Now I would like to throw this discussion to all of you, and all of you, please tell me, how should be our cash flow from the operating activities, positive or negative? Everyone.
Positive.
Positive, right? Okay, so the our cash flow from the operating activities got to be positive and growing, and it must be as big as possible, as big as possible. How should be our cash flow from the investing activities?
Negative. Negative.
Negative, absolutely. So our assuming that the economy is doing well, assuming economy is doing well, and there is a good demand for the products that we make, and therefore for tapping all those opportunities, we obviously have to have a negative cash flow from the investing activities. It means what? It means we are making investment. At the same time, please also remember, if the economy is in a bad shape, industry that we are in is also not doing badly. In such a case, our cash flow from the investing activities should not be negative, should not be negative. But again, there is another dimension. It can still be negative. And why it can be negative? Because if our view is about the economy, that the slump which is there in the economy is not going to last for more than a year, and today is the opportunity of creating more capacities, because after 1 year it is going to be, economy is going to be in boom. Today if I do the capital expenditure, I would be able to do it at lower cost. If I do it after 1 year, then it will be at a higher cost. So we can take that view also, but these are the options that we need to weigh before we come to a conclusion. But generally speaking, investing activities, cash flow from the investing activities should be negative. What about the cash flow from the financing activities?
Negative, as we repay debt, or it all depends. If you're looking to expand business, then you get a
Excellent.
positive.
Absolutely,
And
absolutely.
yeah.
Absolutely, Meena ji, बहुत सही, बिल्कुल है, absolutely right. So remember, how should be our cash flow from the financing activities will depend on what? Let's take one situation. Economy is in boom. Economy is in boom. That means our cash flow from the investing activities got to be negative. So if our cash flow from the if our cash flow from the investing activities got to be negative, that means what? That means so much of money is required to be funded. So then we will have to see as to how is our cash flow from the operating activities. So to the extent the negative cash flow of the investing activities is funded by the operating activities is fine. Anything beyond that will have to be funded from outside. So that means our cash flow from the financing activities in that case should be positive. Should be positive. That means we need to borrow or we need to raise more capital. So this is how you would be able to evaluate as to how your cash flow activities are. And finally, we are now at the last leg of this discussion, how to assess overall performance, position, and prospects of a business. So, there are six things that we can do.